Hey traders, Akil Stokes here, head trading coach at TradingPower.com, and thank you once again for joining me for another one of my weekend review videos. If you are one of the many returning subscribers, I want to say thank you for all of your support. You guys have been doing an excellent job of hitting the like button, sharing, and leaving some very, very positive comments. As you've noticed, I've been doing a few Periscope videos each week, and well, those topics are directly related to what you guys are leaving under these videos. So keep those comments coming because they're impacting a lot of traders in a very positive way. If this is your first time finding me here on YouTube or on the Trading Powered website, hopefully you enjoy what I have to say. This is a weekly video, or a video that I try to do each and every week, sometimes talking technical analysis, sometimes talking trading psychology. Either way, my goal is to give you something of value. And my advice is always go back and watch at least 5 of my previous videos. There's a couple hundred on there, so pick out 5, and that should give you a good idea of my philosophy as a teacher and my philosophy as a trader as well. It's been a very good week in the markets for us, and in today's video, I wanted to share with you a trade that I took on the dollar yen. Typically, when we talk about trading in these YouTube videos, I'm showing you something like an advanced pattern formation or maybe a trend continuation opportunity. This week, the trade that I'm going to share with you is actually what I like to call a consolidation pattern. Many of you know these formations: flag patterns, pennant patterns, triangles, wedges. I kind of group them all into the same category as consolidation patterns. They each have their own little tricks on how you can approach them, but in general, they all look the same. They come after a period of expansion, the market consolidates, and you would expect another period of expansion afterwards. So check out the video. It's of the dollar yen. This trade is still in progress. So when I get back, I'll guess give you an update of what I'm looking at on it. So we want to make it an encouraging atmosphere. But I do want to walk you guys through this trade and kind of my mindset on this. And again, if who knows what the theme of this week's weekend review will be, but maybe I'll be able to include it. But this kind of follows up on a topic that we had in last Monday's private Q&A session. So not Monday the 16th, but last week's private Q&A session with our 12-week transformation members, where we did a little bit of work on CTS, combined technical score. And I really sat back and explained to the traders how the CTS system, although it is meant for counter trend trading, you can often use counter trend trading techniques to enter trend continuation trades. And I even got a few emails kind of just explaining the difference and how the market could be both bullish and bearish at the same time. And here's a pretty cool example of both a bullish signal in a bearish market. Now, if we go back to week 1 stuff, and for you guys that have seen Into the Gray and know about the new structure high, new structure low principles, this is going to seem pretty familiar to you. If you haven't, make sure you go back and watch those videos. They're on the TradingPower.com site. They're 100% free. So if you haven't taken advantage of that, you're really missing out. But let's just measure the recent movement of the market. We have our starting point up here. We're going to label this SP for starting point, right? We have our initial swing high to swing low right there. This is going to be our initial structure. Oh, I keep forgetting I'm on Trading View. Can't do the hotkeys. This is going to be our initial structure low right here. Market then goes into consolidation. You can see we go up, we go down, we chop back and forth, not really breaking our previous outside return, not making any new structure lows. And eventually we break out of that, giving ourselves all of this right here is going to be considered our outside return. So I guess technically right here, since we're writing it down, outside return right there. And then we finally have our new structure low right there. And we know that when we see a combination of lower lows and lower highs, we know that we are in a bearish trend. Now, within this bearish trend, we have something right here called a complex pullback. And this is going to be, we don't talk about Elliott waves in my training, but the whole concept of reading a price chart and how the market ebbs and flows does incur those Elliott wave principles. We're just not sitting here doing the count. But if you look at this right here, we're setting up what could be a potential complex pullback. The market is coming back into our previous structure high. Here's our previous outside return right here, I should say. And we know that if price action is going to continue bearish. We're looking for an outside return anywhere in this level. And if I zoom in the price chart some, and even if I scrunch down to an hourly chart, we're going to see a formation that many new traders may recognize. And this is going to be that some people will call it a flag formation. I like to call these all consolidation patterns, but a flag and ascending triangle, basically a point where the market has expanded up and then we've gone sideways. And, you know, a lot of traders will look at these highs and say, Akil, you have 3 touches here. 1, 2, 3. That's the market holding that level. You got to sell. You got to sell. I tend to think the other way. I'm looking actually at, yes, the market's holding that level, but look what we're doing here. We're getting higher and higher and higher and higher with each retest. And that's a sign that eventually, you know, if you picture this as being a door that the market's knocking on, boom, 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 you knock hard enough through that door, eventually you break through it. So I would actually be looking for a breakout in this scenario to the high side. Where's the breakout going to come to? Well, there's a few ways you can measure that out. Obviously, there's structure up here. This would be the first level I'm looking for. For you guys that are familiar with supply and demand zones, you've got that up here as well, a supply zone. Also, for you guys that are familiar with these consolidation patterns, these again, ascending triangles, wedges, flags, pennants, whatever you want to call them, typically, you know, what is taught is when you see the breakout, it should be of equal length of the flagpole. So essentially, if I just copy and paste that previous move, you can expect, I guess you can expect a breakout equal to that move. I don't really do that. I don't know if it's right or wrong. I've never looked into it. For me, I just look for confluence. So I look for structure. I look for a harmonic move and or an ABCD pattern, I guess you can say, in that area of that structure. And I also like to use my Fibonacci's. In this case, a Fibonacci extension, swing low to swing high, and back down. And you'll see I'll get a Fibonacci extension right at the end of that ABCD pattern as well, along with a psychological number a little bit below that at 111 even. So if we're looking for a breakout in this scenario, I would anticipate that that breakout is going to come up to this structure level, anywhere between 110, looks like 65s, and 111 evens. And of course, stops need to be below structure. So stops need to be below our, the lows of your little, the flag pattern here. You can have them as tight as you want. It's all about your risk appetite. If you want them super, super tight, you're going to have a very, very minimum risk. You're also going to give yourself the chance of getting stopped out. If you have them super far away, you're going to give yourself more breathing room for the market to kind of move around. But if you do get stopped out, you're going to take a bigger loss. So those are some things you need to focus on. Real quick, you want to see something cool? Watch this. If we move this little line up here to where I'm looking for potential targets at, and we zoom left, we look left, structure leaves clues. Pretty cool, right? Right in this structure area, what do we say, 111 flat. We also have price action hitting here, 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 and there, our previous consolidation area. So a few things that I'm looking at. Again, I don't know if I'll post this video. I try to keep the YouTube videos. Maybe I'll give it to the syndicate. That could be. I try to keep the YouTube videos as Barney as possible. So that means as simple, as black and white as possible, because we have the majority of the traders that watch the free YouTube videos are newer traders just looking to get into trading. And when you give them too much, they only know enough to hurt themselves, meaning that many of you, and I hope this isn't the case, but many of you are going to go out there and you're going to start trading situations like this. You may even trade this situation if it's still around by the time you get this video. And it's very, very dangerous to trade something that you don't know, that you just saw. It's like, for you guys that don't know how to drive a stick shift car, a manual car, it's like watching a YouTube video on how to drive a stick shift Porsche and then just hopping right in with no practice and just doing it. Trouble. So that's why we try to keep it simple. But maybe we shouldn't care as much. Everyone's grown. Everyone is risking their own money. I don't know. That's sort of the dilemma of being a teacher. You do care about people. You don't want to see people blow their account, especially when it's based off of following stuff that you teach. But on the other hand, we are grown. Everyone's responsible for their own decisions. We're not telling them to trade this. We're not telling them to buy or sell anything. That's their own decision. It's tough. It's tough. But Now, it's rare that you see me take a trade like this, but I actually used to take these all the time. Before I went ahead and got educated, I actually was a breakout trader, meaning I would look for wedges and flags and triangles and try to play the breakout. And these type of trades always hold a special place in my heart, because it was a trade like this where I really realized and had to admit that I didn't know what I was doing with my trading. I remember filling out a trader assessment years ago, and when I called up my mentor, Jason Stapleton, to talk about it, he really broke it down for me and made me understand that although this setup isn't a bad setup to take, meaning it's not a bad strategy, it means nothing if I don't have clear, solid rules, clear, consistent, solid rules on how to approach it. And I remember going with him through my assessment. He asked me, well, why did you enter here? Well, because of this. Why did you enter there? Well, because sometimes the market does this. Well, typically I'll do that. Well, maybe, usually, eventually getting to the point where I had to admit, I said, hey, I don't have any rules for trading this. I kind of just go off a feel, and if it feels good, I take it. And that was really the start of me admitting that I needed help with my trading, and that if I wanted to get better, I had to do something about it. And we offer that same type of trader assessment now for free. It's done by one of our trading coaches, Charles Miles. And if you give me about 30 seconds, I'm going to do some shameless promotion on his behalf.
When it comes to Forex trading, your goal should be to become an independent and profitable trader. With over 40 years of combined experience, let the professionals at Trade Empowered show you how to give an edge in this arena using strictly price action and technical analysis. Charles Miles, expert Forex trader, wants to get you started. No matter the market you want to trade, Charles is devoted to helping you reach your goals of becoming an independent and consistently profitable trader. To help get you started, Trade Empowered and Charles Miles are offering a free trader assessment. Go to tradeempowered.com/TA. That's tradeempowered.com/TA.
All right, now that we got that out the way, but seriously, guys, you do want to fill out the trader assessment, schedule a call. It's free, and you know it's really hard as traders because in this business we're our own evaluator. So it's always good to have an outside source look at what you're doing and give you some tips on how to improve. Let's head over to the charts and let's take a look at the dollar yen and let's see what's currently happening with it. All right, let's head back down to the 4 hour. As you can see, price action, we did break out of that initial consolidation pattern that we were looking at. However, we did not reach my targets. I'm looking for a move up here to about 110.60s. Price action broke out to the upside after yesterday's FOMC minutes were released. And we came to about 110.40, so about 20 pips short. Now, I'm not freaking out about this trade. As I mentioned in the earlier video, I fully understand that although this is a trend continuation trade on the lower time frames, we are still part of a heavily bearish market. But there's no need for me to freak out and panic just because price action came very close to my target level and did not hit it. You can also see that stops are rolled up above break even. That helps as well because I know the worst case scenario on this trade is that I make what? I make about 50 pips out of it. So it's always comforting to know that if everything goes bad, you still make some money. But as we go down to the 1 hour chart, you can see that the market still has room to move. If we look at our previous breakout above this level, let's move this up a little bit. We can easily get a move right back down to this level. You can see structure here a couple places, and then a continuation to the upside. And what I don't want to do is I don't want to sabotage my chances of getting full targets or full profits hit on this trade because I'm scared. And I mentioned that in a video in the past, and I got a comment underneath the video. I don't remember the comment by heart, but the trader was saying, well, I would have taken profits out right before it reversed. And, I think it's dumb to hold your position on and shoot for targets when you could have made this much or that much. And one of the things you got to realize, gang, is that we don't know that a market's going to reverse until what? We don't know that a market's going to reverse until it reverses. And one of the worst things that we can do is sabotage our system out of fear. Let's just say I get scared. Oh, the market came within 20 pips of my target. It turns around. Oh no, I got to get out of that market right now. And I lock in, 70 pips or so. Well, what happens if the market rolls up here? What happens if the market does roll up? Let's go back to the 4-hour chart and hit my initial target level. Well, then I'm out of luck, and I left about I left almost another 100 pips on the table. And if I consistently do this, I'm going to consistently mess up my risk reward. Again, initially our trade had a risk reward that looked like this. Stops were below here, targets were up here. You can see if I do that consistently, it's about a 2-to-1. If I do that consistently, I put myself in an opportunity where I don't have to win that much to make profit. If I consistently take my targets early, let's say right here at market, well, now I've got to have a much higher win percentage on average in order to see the same type of result. And, I don't want to sabotage that. I forgot what video it was, but it was a few weekend review videos ago where I talked about sabotaging your trade. I think it's called taking profits too early. And actually, this reminds me of an email as well. Let me pause the tape real quick and see if I can find this. It was an email from a trader. It was a trader coming through the 12-week transformation course, and it just kind of clicked for him about he's been doing his back testing, and the light bulb kind of went off on the reality of how we should approach trading. Give me a second. I'll do some editing magic here. All right, so I took a screenshot of the email, and again, this is from a trader that's going through the training course. He's been back testing for about 5 months now, and finally starting to see the power of what he's coming up with. And he says, there are a few things I have learned during this long back testing. 2 of the most important are, 1, I have trained my mental toughness. It takes a lot of willpower to do back testing for 5 months straight when you are a new beginner. There are countless times that I have fallen asleep while back testing, only to wake up, go to the bathroom, splash cold water on my face, and then continue back testing. 2, let's put it like this. Today, if someone would show me a profitable strategy, I would not trade it without back testing first. I want to see the positive expectancy with my own eyes first. Akil, tell me if I have understood this correctly. And this is the part that relates to what I just talked about. Trading is like a casino. It's about probability. That's why we need to have a positive expectancy. Once we have that, we need to do exactly in real trading as we did in backtesting in order to get the same expectancy. That is why we have a trading plan. Well, I don't have one yet, but he's going to make one, I guess. That's why we have a trading plan to follow, to make sure we do exactly as in backtesting. And here's the one you need to write down. When we make mistakes, we deviate from the expectancy. The result can be better or worse than expectancy. There will be wild swings, but this is not wanted since we want to follow our expectancy. This is correct. Yes. And again, the point of this email is saying that trading is about probability. No one trade matters. It's about the whole basket of trading opportunities. And if you break your rules, yes, it may pay off on this one. You may make 100 extra pips on this trade, but in the long run, right, if you consistently do that, you're going to damage yourself somewhere and you're going to sabotage your trading. Again, go back to the video on my homepage. It's called Statistics on Why Most Traders Fail. We looked at a study where the average trader wins 50% of the time. However, 90% of traders plus are failing. Why is that? There's something in there, and it's not the strategy. All of these strategies work, guys. Well, not all of them, but there are hundreds of strategies that work out there. So it's not that you're missing some magic strategy. It's that most traders get in the way of themselves and sabotage their own system. So I'm going to stay patient here on dollar yen. Would not surprise me if we came back to retest the previous structure highs. Again, this support level or this resistance level now turning to support. And I'm going to look for a move back up to 110.60s. Not shooting for anything extended here. Again, bigger picture, we still are in a bearish move. You can see price action going from the top left of my screen to the bottom right. But I will look to take profits, maybe stop and reverse and get a short position and gear up for the next good trade. So thank you guys for joining me for another weekend review video. If you hang on, I'm going to share with you a pretty cool rant from one of our live room sessions. And if you like what you see, guys, remember, hit that like button. Please subscribe if you're new. Leave a comment, especially if you have an idea or a topic that you'd like me to discuss in, say, a live Periscope video. And of course, share this with a friend. Don't hog this awesomeness to yourself, right? You all have trading buddies. Share it with them. Get them on the right track. And hopefully we can continue to grow the great community that we have here at Trade Empowered. So until next time, plan your trade your plan. I know it's cheesy, but I like saying it. And good luck in the markets for the remainder of the week. You guys probably know, I felt ashamed. I felt ashamed to tell, and this goes back to the little rant I did yesterday at the end of the session, where we have the circle of trading, right? We've got this right here, right? We've got the comfort zone where 90% of the population lies, and then we've got the outside. And I felt so ashamed. I felt so ashamed to be out here, because everyone I knew, family, friends, everyone I knew was in here, right? It was so comfortable in here. This is where everyone was. And as soon as I would dip a toe out there, right? I'd dip a little toe in the water. I felt like people were looking at me differently. And I was kind of afraid to be different. It was like elementary school all over again, where you just try to fit in. So for the longest time, I would just have problems admitting what I did. And I wouldn't accept it. I wouldn't embrace it. And I'm not sure why I changed it. But one day, I think I just woke up one day and I was like, you gotta be real with yourself. And I wrote a little elevator pitch. I don't remember what it was. I wrote a little elevator pitch, which is, elevator pitch is what, when you introduce yourself to someone, it's like a 6-second kind of summary of what you are and what you're about. And I don't know what it was, but once I got out here and once I started telling people, hey, I'm a professional Forex trader or currency trader, I felt like relieved. And it was no longer the fear of, oh, what if people ask you, what is that? It was no longer the fear of people asking me, well, what is that? It was kind of like I felt good about it. I want people to ask what I do. It intrigues them. I had a person come to the office yesterday. My wife was showing her around the house, and she came into the office and she's like, wow, this office is amazing. What do you do? And I'm like, I'm a professional currency trader. She's like, what's that? And I felt happy to answer that question. I embraced being different. But I think that's the moment where things change, where I got out of this comfort zone. I came out here, I started embracing what I was, and it was just a big weight off my shoulder. And then everything else kind of fell into place after that. I think it was just a confidence thing. I became more confident. And as I became more confident with myself, I became more confident in my trading. And then just that whole loop of, beliefs, action, results, belief, action, results. You have the right belief, you'll take the right action. You take the right action, you'll get the right results. You get the right results, the more you believe in yourself. And the cycle of life continues. But I don't know what made me change that mindset, but I did. I'm glad I did. Glad I did. I think it's everywhere. I think it's that 90-10, that 10 rule, where 90% of people are inside that comfort zone. 90% of people are inside that comfort zone, and they're so scared to get out of it. And that's the majority of the people. And for the 10% that are outside of it, because it's not in line with the majority, you're made to feel bad about your success. Like there should be no reason if you've had a good trading career and you've decided that, hey, after years and years of trading, I'm going to take some of my profits and I'm going to invest, or I'm going to buy a nice house or a nice car. And you want to take a picture of you and your family from that nice car, there's no reason you should have to think twice about people tearing you up on the internet about doing it. It's the same dumb stuff like, I hate this. It was this mom just got yelled at. She recently had a baby. This was a while ago. You probably heard about it. She recently had a baby. And right after having the baby, guess what she did? She got her behind in the gym and started working out. And she started posting pictures on Facebook and Twitter saying, hey, just had a baby 4 months ago and, I've got my body back. Pictures of, the fitness pictures, like the sports bra and the yoga pants, whatever like that. And she started getting torn up for making other mothers feel bad. Oh, you shouldn't post yourself like that. You're going to make other women feel bad because they're out of shape. No, get in the gym. Yet she wants to celebrate and maybe encourage her success, and she gets torn apart. It's the majority of people that don't want you to succeed. Look at trading forums, guys. They don't want you to succeed in trading forums because there's a bunch of losers in trading forums. Trading forums are full of losers. And they get pleasure by sucking you into their losingness. I don't know how many of you guys have been in a trading forum and you say, hey guys, just had a great trade on pound dollar, and someone there tears you apart. We celebrate it in these live rooms. We celebrate it. You guys get wins, we ring the cash register. That's how it should be. Encouragement. And the difference in our mentality is, guess what? If you don't like it, if you don't like that Ian is working hard and able to promote his success, then do something about it. That's the way I look at it. If we're all climbing up a hill, if success is a hill and we're climbing up, I don't look up and say, man, must be nice up there. I'm gonna pull down Elaine's leg and make her fall so she's back down at the bottom with me. No, I'm gonna shout up to Elaine and say, hey, can you reach a hand down? Can you help me up? Can you give me some advice? Hey, how'd you get from this cliff to that cliff? And that's how it should be. Help each other out. Then we all win. We all win that way. That's why we're in here, guys. That's why you guys are in our live room. We're 60 traders deep today. That's why you're in the London room, because you guys want to be different. You don't want to be like the trading forum people or the people that just randomly watch YouTube videos. You want to be in a place that you're rewarded for your hard work and that you're celebrated. And there's no jealousy. I don't think there's any jealousy from anyone in this live room. It's all encouragement. And we don't have the type of traders that are just in here bragging about how much money they made. Yeah, Lax is saying, hey, I made 200 pips off this, made 50 pips off that. But he's also telling you what he's taking. He's saying, hey, trend continuation trade on pound yen, giving you an opportunity to learn. And every time we get a chance, we try to share with you those opportunities. So sorry for that rant, guys. I feel like the world is off my shoulders now.